Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host, Shanna Burt. Thanks for tuning in today. We are a stewardship ministry, and we believe that God owns everything, and we're here to build up the saints of the church, to educate you all in biblical stewardship and encourage you to adopt a biblically responsible investment strategy and to be joyful, generous, and obedient givers. We call that defunding darkness and funding the light. Our phone lines are open this morning. 610-363-1110 is the phone number if you want to get queued up. We're going to get to some economic information this morning. We're also going to hear some encouragement from 1 Corinthians 15:58 in just a little bit. But let's get right to some of the economic news today. We've got a good bit to catch up on. So again, this is a live show. We welcome your calls. If you have questions or comments, give us a call. 610-363-1110. Now, let's jump right into, I guess, the biggest economic news of the day is the market. So yesterday was a very challenging day for the market. In fact, it was the worst day of the year so far. The Dow Jones fell 2.1% to close at 41,911. The S&P dropped 2.7% for the day, ending at 5614, and the NASDAQ declined 4%, settling in at 17,468. To get a better and broader context, let's pan out just a little bit and see how these market indices have moved from their 52-week highs. So in the last, from the Dow's most recent peak, it is down 7%. The S&P 500 is now down more than 8.5%. And the NASDAQ has officially entered correction territory, down almost 13% from its February 19th peak of 20,204 just 3 weeks ago. So what exactly is a correction? While stock market corrections are defined as a drop of 10 to 20% from a recent high, and they're fairly common. Historically, they tend to happen about every 1 to 2 years on average. So this is different. A correction is different from a bear market, which is when the market is down 20% or more. Bear markets tend to be more severe and last longer. But we have an even longer term strategy than just, this short time period where the corrections happen every 1 to 2 years. And a lot of times we see this, and we hope that you will see it this way too, because I know that our longtime partners do see it this way. When the market starts to drop, we don't get questions about when should I get out. We get questions about when should I add more. And so we hope that you will be like our partners who see these times as buying opportunities in a long-term strategy. So the market numbers that we just talked about do confirm that we are definitely in a period of volatility, but I couldn't agree more with what I've said for decades. The market is moved in the short term by traders who are motivated by fear and greed. We are not traders. We are investors. So we are looking for opportunities to invest in good, solid companies with solid management, solid business plan that operate in excellence and don't use any of their money to fund the dark agendas that are happening in the world and are funded by corporate America in a lot of cases. So who are these traders? These traders are mutual fund, ETF, and hedge fund managers that are manipulating institutional money, trying to make a quick buck based on market movements, because you can make money when the market goes up and you can make money when the market goes down. But these traders try to make a quick buck because their compensation depends on the numbers, the return numbers that they post between January and December. And I would venture to say that lots of them make more money manipulating or managing the money that they're hired to manage on their compensation rather than the returns that they actually make in the market. So these people are focused on short-term gains, which means that they react quickly to the latest news, often without full knowledge or thoughtful digestion of the news that they're hearing. So they're buying and selling based on headlines and what they think trends that they think could materialize. So I don't believe that there are many, if any, sustainably successful market timers. Every dog has its day. Even the worst market timers eventually or occasionally get it right. But that's just not what we do here. We help you to stay focused on the long term because we know that your goals aren't dependent on what happens. Meeting your goals isn't what happened, depends on what happens in the next 10 to 12 months, rather what happens over the next 10 to 12 or even more years, depending on your age and how much longer you have until the day comes whenever your savings and what you've invested will be relied on to meet current needs. So we are running a marathon, not a 50-yard dash. So track meet last night.
Track meet on the brain.
Yeah, we're in track season now. So, if you focus only on the short term, you're going to constantly be chasing the market, reacting out of fear, and missing out on real long-term growth in many instances. That's why biblically responsible investing, our strategy at least, is about steady, disciplined stewardship, not about chasing quick profits. Remember, the scripture references that towards little by little. So little by little, wealth grows. Let's keep that perspective as we navigate this volatility together. So phone lines are open. I know, I suspected that many of you would have questions that you would want to get answered today. So if you want to get your question, you'll be the first caller in the queue, 610-363-1110. Seth, I think we have time maybe to get to a quick question.
Awesome. Yeah, let's do that here, Shanna. Starting here with Frank, 66. He says, in the portfolio tracker, what category do I use for my CD ladder? Which sector? Cash, preferreds, other? What do you think for Frank?
Yeah. So CDs for our strategy are going to fall into the fixed income sector. So anything that you find on the way that the website's broken down, we have our buy list and we have it broken down into different sectors. And so you're going to match it to whatever sector you find it in. So for example, if you go to the partner side of the website, you log in there, you go to fixed income buy list. Under the buy list, you're going to see everything, or even if you're on the broad list, so even if it's something that was on the buy list previously that you have in your portfolio and we haven't told you to sell, so you've held on to it, which you should, then you're going to code it that way. So that'll be matched to the fixed income sector, Frank.
Awesome, Shanna. By the way, quickly, Shanna, you'll be pleased. Several people in the chat are not spooked by what we saw, kind of that dip yesterday. Many of them see it as, this is an opportunity, just like you said. So pretty cool thing about our strategy. That's awesome. Yeah. Next question from Brian, Shanna, he's 57. And he says, how should we compare FX3 to ETF7? What are the advantages / disadvantages to one over the other? What do you think?
Yeah, so they are very, very different. FX3 is a true fixed income investment. So it's going to be made up of short-term treasuries. So it's designed to move very little, have very little volatility, and pay some interest. So stability and income is its purpose in your portfolio. ETF 7 was designed to be a fixed income alternative. It was designed to have very little market volatility because it uses some hedging type strategies to minimize market volatility and still give a good dividend. So the dividend is designed to be in the 4 to 6% range. It's been on the lower end of that range, and it hasn't exactly avoided the kind of market volatility that it was designed to avoid at this point. So the ETF 7 is an equity position. It's just designed to give higher some higher income. So, folks, our phone lines are open. You'll still be the first caller in the queue, 610-363-1110. I so appreciate Seth, Jason filling in for me yesterday. I think he did a great job on the show. You guys did a great job together.
We had some fun, Shanna. It was a joy. Yep.
Yeah, so it was good.
Yep.
So, folks, stay tuned. We're going to take a break here, but we're going to be back. We're going to get some encouragement from the scriptures. We're going to also talk a little bit about Trumpcession. So, interesting thoughts there. So stay tuned. We're going to take a break and be right back.
How is Timothy Plan continuing to lead the fight as you guys now enter your fourth decade of leading this fight of biblically responsible investing?
We've been too silent for too long, and we can no longer be silent. You stand up, like Ronald Reagan said, we're only one generation away from losing all of our liberty. Yeah. It has to be fought for. I wish it didn't. And you can fight for it. You don't need guns and ammunition and that. You can fight for it, especially with your dollars, because it's always about the money. And when the money starts impacting people, they start paying attention. When we launched this, they said it couldn't be done, but here we are 30 years later. They said you couldn't get competitive returns, but here we are.
What a tremendous testament of God's grace.
Go to financialissues.org/Timothy Plans to learn more about Timothy Plan.
Colossians 1:13 tells us, "For he has rescued us from the kingdom of darkness and transferred us into the kingdom of his dear Son." Right now, children across the country are waiting for that rescue. Will you help us reach 100 kids? By sponsoring a child and by writing them a personal letter of encouragement, you can shine Christ's love in a place where it's needed most. Visit reachOurSchools.com today and change a child's future forever.
Hi, this is Sheena Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shanna are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Phone lines are open. 610-363-1110 is the phone number. You'll be the first caller in the queue. 610-363-1110. So, Trumpcession. Are we in a Trumpcession? Is the term that's being coined here lately, talking about a recession that is, some are saying, will be brought on by President Trump's economic policies. I did write in the commentary on the partner side of the website in a little bit more detail than I'll go into here. So if you are a partner, make sure that you go check that out. We had a little short break on updating the commentary. I was on vacation the week before, and then last week it's just a rough week coming back from vacation, and so there is a commentary posted now for the partners. So is the economy in detox mode? Treasury Secretary Scott Bessent said recently he described the economy as undergoing a detox process after years of heavy government spending. So there seems to be a disagreement, though, among policymakers. Fed Chairman Jay Powell recently spoke about factors that boosted the U.S. pandemic growth, but he left out this government spending that is, I believe, one of the main reasons for the out-of-control inflation that we saw under the Biden administration. So now we have another major voice entering the discussion. Commerce Secretary Howard Lutnick made some strong statements last week on CNBC about inflation. I think we have a clip to play for that, guys. You got that clip ready to roll?
Yep, it's coming up here, Shanna. Hang on.
Given that we had 2 negative quarters, that used to be a recession under Biden, and then that wasn't a recession. I think that what's going to happen is the first quarter is going to squeak into the positive category, and then the second quarter is going to take off as everybody sees the reality of the tax cuts.
Yeah. So he also went on to say that tariffs don't cause inflation. He said government spending does. Lutnick.
Where have I heard that before, Shannon? You must listen to the show.
I guess if you listen to the show, you probably heard that a time or two for the last several years. Well, probably longer than that. So, Howard Lutnick also acknowledged that consumers might experience short-term price increases due to tariffs, but he assured the listening audience that long-term economic outlook should improve. He suggested that the Trump policies would lead to a resurgence in American manufacturing, a balanced federal budget. Can you guys imagine that? A balanced federal budget.
Is this heaven? Is that what heaven's like?
That's a novel concept, right? And eventually lowered borrowing cost over time, because if the Fed is not using monetary policy to combat inflation, then they can reduce interest rates. So the perspective challenges the mainstream narrative that tariffs are inflationary and puts the focus back on government spending as the real driver of inflation, as it should be. Meanwhile, the Federal Reserve's Beige Book reports said this: overall economic activity rose slightly since mid-January. 6 districts reported no change, 4 reported modest or moderate growth, and 2 noted slight contractions. In other words, economic growth is slowing. And for the first time in a while, GDP may not be artificially inflated by increased government spendings. Or in other words, GDP is not going to be purchased with taxpayer dollars anymore, along with all of the other nonsense that taxpayer dollars have been used to fund. So there is this ongoing discussion about a Trumpcession, a term that some analysts are using to describe a possible recession triggered by major policy shifts under the Trump administration, particularly concerning government spending and trade policies. So we heard what Kevin Hassett said just a little bit earlier about this recession, and he suggests that a recession or a major shift in economic policy is coming, one that could cause short-term pain, something that we too have also been saying, but aims for the longer-term prosperity. It's going to take some pain to get to where we need to be. But as biblically responsible investors, how do we prepare? For those of you who are financial issues partners, again, check out the partner commentary because I do go a little bit deeper into some of the topics that I just discussed. But President Trump said that he didn't deny that we could potentially have a recession. He's not taking that off the table. He's not saying that we are either, but he's saying we're doing some very big things. So some of these very big things: Senator Marco Rubio canceled 83% of U.S. AID contracts after a 6-week review after DOJ uncovered the massive fraud, waste, and abuse through an audit of the U.S. AID contracts. So there is a massive shakeup in how taxpayer dollars are being allocated overseas under Rubio. U.S. AID has been long criticized for its wasteful spending. So we're going to definitely be keeping an eye on how those funds are being redirected. Additionally, Doge is still hard at work. Elon Musk's team has uncovered nearly 5,600 small business administration loans that went to businesses whose only listed owner was an 11-year-old or younger child. So that brings into focus even more fraud, waste, and abuse in government programs, which is unfortunately all too common and tragic that taxpayer money is involved in all this. So these stories are reminders of why we must be vigilant stewards of our investments and our tax dollars. So what happens when the government gets on a Biggest Loser plan? So let's look at a real world example of what happens when a government goes on the Biggest Loser program, getting massive liposuction and big injections of GLP-1s, removing tons of fat and eliminating its immense appetite for wasteful spending that has led to massive debt and inflation. This real world example that I'm talking about, Argentina. When Javier Milei took office in December of 2023, he brought a bureaucrat-busting chainsaw that he passed on to Elon Musk, by the way, to Argentina's bloated government. He slashed Argentina's government spending by 6% of GDP. And guess what? It didn't result in a 6% drop in GDP. Instead, Argentina's GDP dropped by only 3.5%. The portion that wasn't real anyway went away. That was the 3.5% fake growth artificially created by government spending. And that's unashamedly what the Biden economists push for, is government. It's the government's job to stimulate the economy, so they need to use taxpayer dollars to inject stimulus, to create jobs and all of that other thing. The opposing side of that is what we believe is that the economy should be driven by American ingenuity and hard work in the private sector. The government's job should be very limited. So what happened next in Argentina? By cutting through the fat, Milei revealed the muscle of the Argentinian economy. The 2.5% of real growth was fueled by the real economy, not by government handouts and massive amounts of fraud, waste, and abuse. So here's what's even more telling. Once the fat was removed, the muscle went to work. GDP rebounded, and now Argentina's economy is projected to be growing at around 8%. So if we take a look at the other component of that, which is inflation, Argentina's month-over-month inflation rates have dramatically improved. In December of 2023, when he took office, the month-over-month inflation was 25.5%. By March of 2024, it was down to 11, and as of January of 2025, it's down to 2.2%. Coincidence? Not at all. This is proof that cutting government waste and allowing the free market to operate leads to real sustainable growth. All right, I think we need to shift gears and get to the stewardship verse of the day to close out this first half of the show. It comes from Corinthians 15:58. Therefore, my beloved brothers, be steadfast, immovable, always abounding in the work of the Lord, knowing that in the Lord your labor is not in vain. Boy, that is a good reminder lately. But being stubborn is not usually considered a positive character trait. The Old Testament Israelites were dubbed as stiff-necked and stubborn because of their rebelliousness, their stubbornness, and their resistance to God's guidance. And if I'm honest, I probably been called stubborn a time or two, and probably rightly so. But I prefer to recharacterize that as being tenacious, steadfast, and immovable. Paul is actually encouraging believers here to be steadfast, immovable, stubborn, if you will. But to be steadfast, immovable, and stubborn about fully embracing and clinging to God's ways and being tenacious, rejecting our own foolish bent. So biblically responsible investing requires unwavering dedication to honoring God. That's the main goal, to honor God with our financial decisions. This means resisting the temptation to compromise for higher returns if it means supporting companies that are engaged in unbiblical practices. Sometimes following biblically responsible investing principles may seem challenging, especially if it means walking away from a profitable but morally compromised investment. However, this verse reminds us that any sacrifice made in obedience to God is never wasted. The impact of biblically responsible investing extends far beyond financial returns. It helps to build a legacy of faith. Well, folks, if you're listening to an outlet that only carries the short version of the program, we wish you a farewell. For everybody else, stick around. We've got more financial issues to come right after this.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
And we're the Gen X.
And we're Samaritan members.
When a woman comes into a center, she's being pressured from her family, from her friends, by her circumstances, by the rhetoric of the culture to believe that this is a quick and easy way out. If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. And on top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn. The donations that you give actually make a difference. Last year, 59,000 babies were saved because of what you have done with your generosity. And so we just encourage you to make a difference at whatever degree you can, whether you can do a $28 contribution for one ultrasound, whether you can underwrite an ultrasound machine for $15,000 or 10 ultrasound machines for $150,000. Where does the Lord have you so that you can make a difference?
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Every day, a child walks into school carrying more than just a backpack. This child carries the weight of loneliness, fear, and uncertainty, and spiritual darkness. But there is hope.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He pays for our sins.
This Easter, be part of God's rescue plan by helping a school-aged child out of the darkness. By sponsoring a child, you could help them discover Jesus and put them on a path to a better future. Our goal is for the FISM audience to sponsor 100 children. As an added bonus, a generous donor has pledged to match up to $35,000. This means your gift will go twice as far. Go now to reachOurschools.com and bring the light of Christ into the life of a child. That's reachOurschools.com.
Welcome back to Financial Issues. Thanks for tuning in this morning. Our phone lines are open and the call queue is wide open. You'll be the first caller in the queue if you want to get in and ask a question. Phone number 610-363-1110. So I hope if you usually just listen to the first half of the show, you've stuck around today. If you're on an outlet that doesn't carry it, I hope you've found the rest of it, because I wanted to get to this in the first part of the show, but didn't get a chance to. So we are in the midst of helping Crossroads Kid Club do a campaign. You can find information at reachOurschools.com. Seth, do you want to give us an update, our goal and where we are in trying to meet all that?
Absolutely, Shanna. Folks, we had a huge day yesterday. It was awesome. We got 13 kids sponsored alone yesterday. So we're up over a third of our way there now. I think our numbers as of this morning are 36 kids sponsored out of 100 kids. Just want to remind you all, folks, it's whatever you can give. The number that we've been saying is $384. That sponsors one child. But we've had people who have sponsored multiple, 3 to 5 children. We've had some who've only been able to give, $5 or $10. And that's great as well. And even if you can't give, also there's an option for you to be able to write a card to a child as well. So make sure that you do that. All of that's on reachOurschools.com. The easiest way to remember it is when you go there, click on any of the green buttons that say sponsor a child. They're peppered all throughout that page there. So you can click on any of those. That'll take you to the place where you can give. And then there's also the option to write a card as well. But we're doing a great job with this campaign. It's awesome to see so many kids sponsored, and this means so many of these kids are going to hear the gospel in public school. So awesome stuff.
Funding the light is very, very important. So, that's one of the things that we use the megaphone of financial issues for, is to bring you opportunities where we know there's good ground to plant seed. Because, for a lot of us, giving money is one of the best ways that, and most convenient ways that we can get involved in the kingdom work that's happening in the world. Well, you know what? If money doesn't happen to be your most abundant resource, maybe you've got time. I would encourage you to go to that Crossroads Kids, reachOurschools.com. You can find out more information about the program, and you can actually see if there is a Crossroad Kids Club in one of your local schools. If you're involved in a church and maybe there's not one in your area, perhaps you could reach out and consider volunteering in helping to bring a kids club to one of your local schools. I actually went and visited one that's within a couple of hours of where I live. It's in Houston, Texas, and I visited the club there, and it was just a really great experience. I mean, it was a place where kids can come right after school. They don't have to leave the campus. The program happens on campus. It's a very simple but powerful program. So, you start out by connecting with the kids just on their level, playing a little game with a ball. It's elementary school kids. And so you're connecting with them there. You'd be really surprised what kids tell you when you're just playing games with them or things like that. Then you go in, you hear Bible teaching, you hear the gospel message, you do other little craft activities or different things. And, it's a really great opportunity to get involved. And there's the stories, just the little testimonials there about, the kid Daniel that, not his real name, I guess, but, that was exposed to pornography at 8 years old and became addicted. But through the, God used a kids club, a Crossroads Kids Club in his area to reach him with the gospel of Jesus Christ. And he was delivered from that addiction and is, standing strong in his faith at 16 years old. There's other examples too, but I would just really encourage you to do what you can to help us meet those obligations. It's dollars that fund darkness. That's what we're trying to avoid with biblically responsible investing. And it's dollars, the same dollars that also fund the light. So you can think of your financial resources as a spiritual weapon. So just encourage you there. Go find out more about that. I think this is a good time probably to get to some questions.
Yeah.
We're sort of backed up.
Sounds good, Shannon. Yeah, let's do this one here. We've got Elizabeth is 76 years old, and a question about MA5 after reading the commentary from February 17th of this year. So after purchasing MA5, which stated on the FI website was an ETF, her particular stockbroker claims that it's listed as a stock, not an ETF. And she's wondering, why do we list this particular investment as an ETF? And then she has just a follow-up comment that MA55 was listed after I purchased it as an ETF as well.
Okay. So I don't know. I can't really speak for Vanguard and how they categorize things. A lot of times this is just kind of done in bulk. Maybe it's because the trust, the MA5 trades like a stock. So maybe they list it as an equity. I guess it depends on if you're talking about, what kind of classification. If you're talking about asset allocation, if you're talking about, stocks or equity versus fixed income. I don't really know why they did it like that, but we list it as an ETF because it is an exchange traded trust. So it fits more closely to the definition of an ETF.
Awesome, Shannon. Buddy is up next here, 30 years old. He's saying, I have a Roth under 10 grand, and I'd like to do the age-appropriate Timothy plan model. In that model, there are allocations for mutual funds with minimums I wouldn't be able to meet without being wildly out of balance. What should I do about this? Currently, I won't be contributing to the account as I'm tight on my budget for the foreseeable future right now. Thanks and God bless. Buddy's 30, by the way, Shannon.
Okay. So I'm not sure if he's looking at the iShares. Those are institutional shares, and a lot of times it says that the minimum is $100,000. The iShares versus A shares, we do have some commentary on our website for partners that kind of explains the difference there. But the institutional shares sometimes say that they have a minimum of $100,000. But if you put your order in for it, if it's allowable on your platform to be traded in the type of account that you have, it's going to execute the trade for you without holding you to the minimum of $100,000. Also, some of the funds in the A shares will even say that there is a $2,500 minimum. A lot of times that can be bypassed as well. I know if you're investing in an IRA, a lot of times those minimums are waived. So what I would suggest doing is just to try to put the order in for the amount that you're wanting it to go in, and see if it works. If it doesn't, maybe you're looking at doing, trying to get $500 into a mutual fund. Another workaround that you could use is to set up a systematic investment plan. Different brokerage platforms call it different things, but basically it's just whenever you set up an automatic plan to invest a certain dollar amount regularly, on a regular basis. So let's say you're trying to get $500 in. Maybe you go set up a systematic investment plan where you're going to put $100 a month in. You can set a start and stop date for it. So you just set up the stop date for 5 months down the road. A lot of times that will bypass those minimum requirements, and you'll be able to get the money invested and do it in a way that we recommend. So when you're doing mutual funds and ETFs, it's a great idea to use a dollar cost averaging strategy, which is exactly what I just described. Set dollar amount on a regular basis. It really helps you to step back and to take the emotion, the fear and the greed out of investing, because a lot of times, people can get really paralyzed by, the market's fallen. Should I wait for it to go down a little bit more? Or the market's going up. Maybe I should get in today. Oh, dang it. I should have got in yesterday. So being disciplined really helps to take the emotion out of it and sets you on what has historically been very successful strategy. Well, folks, we have Craig Halgert coming in with the Ag Report. After Craig, we're going to take a short break, then we'll be back with more financial issues.
This is Craig Halgard with your Financial Issues Ag Update for March 11th. Corn benefited from a weekend that had an absence of new tariffs and countervailing tariff news for the U.S. Weekly export inspections came in over 15 million bushels above the top end of expectation, while the domestic picture also remains strong with processor bids firming up across most of the Corn Belt. As a result, May corn was 2 3/4 cents higher at $4.72 per bushel. Soybeans had kind of a convoluted story yesterday. China announced that it was tariffing $2.6 billion worth of Canadian agricultural and food imports, including canola oil, hitting them with 100% tariff rates. Now, this caused soybean oil futures to fall sharply in anticipation that canola oil would reroute to the U.S., and of course, this had a negative impact on soybean prices. May beans finished the day 11 cents lower at $10.14. Wheat had a strong session as traders reacted quickly to fears of warm and dry conditions in the southern plains of the U.S. The rally seemed to be based solely on U.S. weather as the U.S. weekly export inspections dipped to a 4-month low. Minneapolis May wheat was 11 3/4 cents higher at $6.04.5. Kansas City rose by 13 3/4 cents to close at $5.78.5. And we had Chicago 11 1/4 cents better at $5.62.5. Cotton futures went up and tested some technical resistance, but failed to break through to the upside. At the closing bell, May futures were 7 points lower at $66 per hundred. Livestock futures were mixed. April live cattle were 30 cents higher at $200.57.5 per hundredweight. April feeder cattle dropped by 22.5 cents as they closed out the day at $277.92.5 per hundred. And we had April lean hog futures 95 cents stronger, closing the day at $88.30 per hundredweight. Class C milk futures spent the day in a very narrow trading range. At the close, we had April 4 points lower, ending the day at 17.16. Well, this has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Through the ministry of Preborn, the Financial Issues family has saved tens of thousands of lives of babies. What an amazing job that God has done through you, the Financial Issues family. Would you join us in saving the lives of babies? What an amazing reunion we will have in glory, meeting all the people that we have saved. Please go to preborn.org, that is preborn.org, or financialissues.org, and click on the Preborn banner.
Every day, a child walks into school carrying more than just a backpack. This child carries the weight of loneliness, fear, and uncertainty, and spiritual darkness. But there is hope.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He pays for our sins.
This Easter, be part of God's rescue plan by helping a school-aged child out of the darkness. By sponsoring a child, you could help them discover Jesus and put them on a path to a better future. Our goal is for the FISM audience to sponsor 100 children. As an added bonus, a generous donor has pledged to match up to $35,000. This means your gift will go twice as far. Go now to reachOurSchools.com and bring the light of Christ into the life of a child. That's reachOurSchools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues, and I wanted to give a shout out to some new CSN stations. So our 30-minute show plays during the afternoon on the CSN stations, and then our full hour plays later on in the evening. So if you're listening on one of the new CSN stations, KXML 90.3 FM in Moses Lake, Washington, or KYML 88.1 in San Diego. Is that supposed to be county or San Diego County?
County
Estates in California.
Yeah.
KXAO 88.7 in Joshua Tree, California. Welcome. We're so glad that you have found Financial Issues, and it is our privilege and honor to be able to come to you to bring you stewardship teachings straight from the Word of God, encourage you to be a good steward, and to help you if you want to make better choices in the way that you invest. If you want to honor God, we have a biblically responsible investment strategy that you can learn more about by going to our website, financialissues.org. While you're there, because I know if you're listening to Christian radio, you are already a joyful, generous, and obedient giver. So we have an opportunity to support a great organization called Crossroads Kids Club. You can find out information at our website or go to reachOurSchools.com. Well, Seth, I think we got about 10 minutes left in the show. Let's see if we can answer some of these questions that have been coming in.
Good call, Shanna. Let's do it. Austin up first, 29 years old. Austin's a good friend of the ministry and partner, and he's asking how it pertains to the show from yesterday and Social Security. So this was my conversation with Jason yesterday, Shanna. He's saying, I'd like to know how the funds of Social Security are managed as compared to the FISM strategy. I can't help but assume that the funds are mismanaged and or invested into programs, strategies, and companies that favor things like ESG and DEI. If this is the case, it could be classified as fraud, I think, and we should fight to regain our stewardship responsibility over this money. What would you have to say in response to that, Shanna?
Yeah, so I don't believe Social Security is actually invested like what we would do with our money in a retirement account. So what happens for the most part is what's being paid out to recipients of Social Security is being paid in by you and I, people who are paying taxes. So I don't believe that money is invested like a pension fund or anything like that. But, yes, there is fraud, waste, and abuse that is being uncovered by DOJ. 20 million people not necessarily receiving Social Security benefits, but identified on the by the Social Security Administration as still alive, even though I think the oldest one was 360 years old, like more than 100 years older than our country. So 20 million people over the age of 100, Social Security program thinks are still alive. I don't think that that's accurate. So, there's a lot of problem. I mean, I think the government looks like I was looking at the B-roll there, and it looked like DOS based or the old DOS based. I don't know if Seth, if you even can remember that. But
sure
when I started learning computers, that you had the black screen and you had to type the commands and things like that.
Yeah.
And I think that's probably what the government's still using.
Yeah, seriously.
There are definitely efficiency improvements that could be made. Waste, fraud, and abuse could be eliminated. Jason made a good point yesterday that there are probably some things that need to change, and I'm not an advocate of changing things for the people who are now at their point of need, who have paid into Social Security. I don't believe President Trump is either. I don't believe any politician that even, remotely wants to get reelected is going to mess with any of that. And I don't think that's what anybody's talking about. But when Social Security was started, most people weren't even expected to reach the age of starting benefits. And if they did, they weren't expected to live on those benefits for the long term. But with, even though Americans are at some of their probably unhealthiest as we've been in our history, medicine has had lots of advances. So people are living a lot longer than they used to. And, the average age of starting of benefits is as early as 60, almost 63 for some people. So, making some changes in the way that Social Security is run, I think is necessary. So, we probably need to shift for some of the younger people a minimum start age of 70. So, Seth, I heard you ask Jason, what should we be doing as young people? You guys are a lot younger than I am, but even my retirement planning for myself, I don't even think about Social Security. If I get it, I'm going to consider it an extra.
Icing on the cake, yeah.
I think that that's the way that young people should look at it. I mean, gosh, if I was, even in my case, I think I'm 48. I'm going to be 49 here shortly. But, even in my case, when I think about retirement planning, if we were able to privatize Social Security at some point in time, which I think is a wonderful idea, get it out of the hands of the government. I would do it in a heartbeat, but, of course I have a lot of knowledge and experience in managing money and think I can do a far better job than what the government does. But, I think there is a way to fix Social Security. I mean, would it involve some pain? I mean, I guess if you're 30 years old and thought you were going to retire at 62 and get this great income from and Social Security was going to be a big part of, what you were going to use to replace your income, then you'll probably be disappointed in that. But, there's not really a whole lot of examples of retirement the way that the world portrays it, going on endless cruises and vacations and sitting on a beach and, doing those things. I think the Lord wants us to be about our Father's business at every age. So whether we're a brand new Christian or whether we're 90 years old, I think the Lord wants us to be about his business. He's always got purpose for us. And so,
yeah, well said, Shanna. Thank you for that. I mean, that's a great reminder. I when I think about Social Security, usually it just makes me mad. But what you said there was a wonderful, okay, let's diffuse this a little bit. If it's there, great. And if it's not, then you need to make sure that you're doing the work now as a young person so that when you get to that age, you're not relying on it. And if it is there, it's icing on the cake, Right. So that's
and I wouldn't spend too much time worrying about it if you're already at the stage where you're receiving benefits or you're close. I don't think that I think it's political suicide for any politician to try to take that away from you, and I don't think they're going to do it.
Yep, makes sense. Good stuff, Shanna. Chanel is up next here asking, what would you recommend for an HSA account? She's 37 years old. What do you think?
So I'm guessing she's talking maybe about as far as an investment goes. What I would suggest if you're doing an HSA account is to take a look at the way that you're utilizing it. So are you using it to pay for, are you funding it and then using it to pay for some of your medical costs that you're currently having? Or is this more of a tax advantaged account that you look at trying to build up and grow for future expenses? If you're using it or you have the possibility of needing to use it to meet deductibles, I wouldn't invest a good chunk of it. So I would leave enough in cash so that there's no fluctuation in value in case you need to meet your deductible. So you're going to look at your health plan. You're going to see, if I had a major need, how much money am I going to have to spend to get the care that I need? I would leave that money in cash. And then beyond that, it just depends on if that's your only investment. I would probably use one of the ETFs, one of the first 4 ETFs on our list. I believe ETF 1 through 6. I would take a look at one of those. If you're more aggressive, you want to use maybe the more aggressive ones. If you have a lower risk tolerance, then maybe use one of the enhanced strategies. That's going to give you instant diversification. If your HSA is just part of a much bigger portfolio, that's the way that I tend to manage when I'm managing a portfolio. I manage whether it's in an IRA, a Roth, an HSA, just a regular investment account, all of that. If all of that is one pot of money, then I like to strategically place things where they would go. So if I were using it in that type of strategy, I would maybe look at over and above the amount that you need for short-term needs for the next year or two, maybe a technology stock because it's going to give you some great tax benefits if it grows in that type of account. Wow.
Busy show, huh?
Busy show, yep. Well, folks, we're at the end of the program today. Financial Issues is going to be here to remind you every day that God owns everything. Everything that we have belongs to him. One day, the master is going to come back and we're going to be held to account. We're going to have to give an account of how we handled the time, treasure, and talent that the Lord trusted us to manage. We want to be here to help you be found a good and faithful steward when you give the answers on those days. So find out more about our biblically responsible investment strategy at financialissues.org. While you're there, defunding darkness, consider funding the light and check out our Crossroads campaign at reachOurschools.com. We'll tune in tomorrow, Lord willing. We'll be here with more financial issues. I'm your host, Shanna Burke. Have a great day.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.